All right, ladies and gentlemen, welcome to another edition of This Week in Crypto. Our first in February here. We have been roller coastering back and forth, obviously, over the last week or so. We're looking at just the last day right now to take a look at just how returns have been. And clearly, we've seen a nice rebound with several altcoins being above 5% in price returns. If we go to the past week, it looks a little more interesting. We actually have Bitcoin here sitting at 37.8, just a very marginal rise over the past 7 days, while Ethereum, on the other hand, has really rebounded quickly after being as low as 22. I think it even got to the 2100 range at one point about 7 to 10 days ago. But look at how many of these altcoins have really started to rebound. We've got Unisat Leo at 45%. Tezos has jumped up 33%. Quant 46%. Kunos X 47%. Maker here also did really well at plus 25. Lots of altcoin projects have rebounded despite kind of going through a pretty significant volatility cycle pretty much for the past couple of weeks here, ever since prices really were pushing down to the low 30Ks for Bitcoin there. And altcoins were, of course, really flushed down, with many of them losing well over half their value, many over 2/3 of their value since the all-time high in mid-November. So we're going to jump into quite a bit today. As you guys see by the title, we are going to put an emphasis on whales a bit, so we can understand exactly what Bitcoin's whales are looking like, as well as a few other projects. I want to, of course, advise everyone, as always, that these calls are not for investment advice. They are to analyze the markets based on the health that is displayed to us through our metrics here, and try to identify through indicators that have shown us key alpha in the past as to what they're looking like right now. So all that said, let's look at Quant really quick. I just wanted to kick off with this because the whales have been quite interesting. Obviously, going back here, Quant was highlighted right here as a plus 46% gainer over the past week. And looking at how their big whales have accumulated, the ones that hold between 100,000 and a million quant. This makes up 32.4%, just under a third of the supply is from these holders. And we can see very clearly they've been on a nice accumulation trend pretty much for the last 2.5 weeks or so. They had a big drop off here, and look at how the price fell off right after they had this little dump between the 17th and 19th. And then once it started dropping off, boom, they start accumulating again, and prices have really risen. Many altcoins and Bitcoin are kind of looking like this, while Quant has really surpassed them after a pretty long-term drop here for a couple of months. So that's the kind of alpha that we're looking for with a lot of these altcoins and with Bitcoin. And maybe we'll try to extend our time on looking at some other projects because there's so much interest in which altcoins to jump into right now. But this is just a nice example I thought you guys would appreciate. Looking over at some of the social trends right now, I also wanted to highlight the buy the dip versus buy the dips, or I should say, and buy the dips mentions to see exactly how often this kind of phrasing is being mentioned on social media right now based on the public platforms that we scrape data on. We obviously saw the huge mentions of buy the dip back here in early December. And as we've discussed in plenty of calls in the past, when there's a lot of discussion related to buying the dip, it usually is not yet time to buy the dip. You want to wait until the crowd is fearful and not actually interested, or they don't believe that the price will jump back up. And that is the time that the prices actually do tend to have a nice bump to them. We can see very clearly recently, about 2 weeks ago, we had this big spike in buy the dip that occurred as the prices fell down, got below 35K here. And then as prices rose, obviously the mentions of buy the dip have ceased because there isn't as much fresh dip action to buy, of course, but also it's because there's not as much belief that prices will rebound. And guess what? We're back above 38K right now, indicating that the dip has been a good a buy if you actually did buy back here and were able to be patient. So our social data is indicating that people aren't exactly euphoric, but they're not fearful right now either, and that works to Bitcoin's advantage. It's kind of a neutral, polarizing time where there are very strong bears who think we're eventually going to go back down to 30K or below, and then we have many that say that this was all just a fluke related to, equities markets and the FOMC meeting and all sorts of things that plummeted prices for reasons that were not organic. Another trend that I wanted to look at was the mentions of Omicron or COVID and see exactly how that has changed over time. We're looking at just the past year. Let me actually switch this to 2 years ago so we can get the whole picture. So clearly, COVID came into the consciousness in late February, really gained steam in early March. Prices were suppressed. And then as COVID mentions stayed low, the price was able to rise. Now, there was more and more mentions because, of course, especially going into into 2021, cases were surging. Obviously, there were cycles where it looked like the pandemic was going down. Then a huge surge would, change everyone's tune. Obviously, when prices went down, that was when mentions got high because people look for explanations as to why, the price of Bitcoin is actually dropping instead of rising. So we saw some of that. We saw a big lapse of mentions of COVID and Omicron right here from early October until early November. And during this time, obviously, we made all-time highs. We went from, the bottom in late September around 41K all the way above 68K before having that big retrace that caught a lot of people off guard. We had this huge surge in Omicron here, which was, of course, when Omicron cases were really getting wild and into public minds. And it stayed pretty high. This is a concern, and it probably has to do with some of the volatility. If we were able to look at these stats and how they correlated with traditional markets, it would probably be around the same thing with public forums and stock traders very interested in how the pandemic is looking right now and how it might be affecting the ability for their own markets to thrive. So we're fortunate that we have this kind of data in crypto because it really tells us when fear is still a very real thing, which it is in terms of, a worldwide pandemic, the likes of which we haven't seen for a century, I believe, in most countries out there. So we're looking at something that's quite interesting right now. And, I'm going to be monitoring whether these spikes start to rise once again. For now, it's at least kind of flat, but obviously, it's still way, way above where it was when Black Thursday first hit. People have, now just kind of learned to accept it and live with it, but it's still very much a topic of conversation in these public forums that we track on a daily basis. For those of you who don't know, we track all of our social data on 5 different platforms: Discord, Telegram, Reddit, what am I missing? Twitter, and then pro traders chats. And we can see, actually broken down whether it's coming from Telegram, coming from Reddit, and bingo, we're seeing it mostly coming from Twitter right now. So there's quite a bit of discussion on crypto channels and just general Twitter talk related to Omicron and COVID right now. All right, let's move on to some Bitcoin because this is obviously the big topic. And it's obviously been mostly flat. If you've been a Bitcoin maxi through all this, you were quite pleased by the fact that prices didn't retrace nearly as much as they did for altcoins during, the December and January months. However, now that prices have rebounded a bit across crypto, Bitcoin has kind of been left in the dust a bit. It's definitely risen. And if you bought the dip around that 32 to 33K mark at the bottom, you did pretty well for yourself. But fractionally, it's risen compared to many of the other projects out there. Obviously, going back to the screener, Ethereum alone has jumped about 17%, while Bitcoin's only up about 2.5%. So that tells you a lot about how, Bitcoin has been relatively stagnant, but it's sort of working as a sector anchor right now and keeping everything else at bay and being able to rebound because Bitcoin is no longer plummeting. And sometimes that's all the crypto markets need in order for all sorts of projects to begin to rebound and return to the prosperity that they were in a couple months ago. So if we look at the whales and exactly what they're doing, of course, to remind everyone, this is the key whale chart that we like to look at that combines the holdings of the 100 to 1,000 here and the 1,000 to 10,000 addresses here, and combines them into this gold line to give us an idea of what those top active traders in most cases are doing with their assets. These are very large millionaire to 100 millionaire addresses in Bitcoin. So these are no joke, and they are very quickly a nice leader in where prices will go next if you pay close attention to what they're doing. We had a huge, let me take off these now so we can look at just the gold line. We had a huge dump that really started in late October, and 2 weeks later we had our all-time high. But because there was so little, or I should say relatively little, that these whales were holding, the prices did quickly decline after that as whales continued to dump. And right here, early January, they actually started to accumulate despite prices falling a little bit more. And now it's very interesting because we've actually seen another dump occur just in the past week. This is a big drop off, guys, where they went from 48.82% of the supply down to a low of 48.27. That's a big dump in the span of just 1 week. And we're actually at the lowest point that we've been in 6 months. And I can even back this out because it's close to a year low now. the supply held is down at 48, call it 48.3%, and the low for the year was 48.2%. I can also change that to absolute values so we can take a look at exactly how much Bitcoin this really is. I've highlighted 100 to 10,000, put them together, and it looks a little better, right? Because there's more supply in Bitcoin than there was a year ago. So that means the percentage held is a higher total amount of Bitcoin compared to where it was 6, 7, 8 months ago when we were really low. So May 22 is when they were at their low at 9.02 million Bitcoin held. They're now at 9.15 million. So they have gained 130,000 Bitcoin since that time. But as we saw in the percentage of supply, it's still quite low and indicates that there is dumping going on despite the natural increase of these Bitcoin addresses due to the fact that there is more being mined. And you can still see, in late October, 9.32 million held back then versus 9.15 now. So we're talking about 170,000 Bitcoin that was in these wallets 3 months ago and is not now. So that's something that we want to keep in mind. It still indicates to me and our team that whales are not as confident as we want them to be, especially with this latest downtick that just happened in the past week. That's a bit surprising to go from 9.24 million down to 9.15, dropping 90,000 more Bitcoin combined while prices are this low and have already fallen off this much. It could indicate that we're still in for a bit of a ride and there's going to be more volatility. It's certainly not like a apocalyptic drop of any kind, but it is pretty sizable. If you look at the chart for the last year, it's very rare to see a week where 80,000 to 90,000, what was it? 9.24. Yeah, so 90,000, it's rare for that amount of Bitcoin to be dumped in one single week from this particular Bitcoin tier. We can also look at something that's a little more positive, which would be the tier right above. And the reason we don't usually include these is because a lot of these addresses with 10,000 to 100,000 Bitcoin, they are generally filled with a lot of exchange addresses and addresses that don't necessarily do active trading. They are just simply, stable addresses that are used for liquidity purposes. So they don't give us as much alpha necessarily. However, it is still nice to see that there has been an uptick in just how much these BTC addresses hold. So if you're worried about just, a major conspiracy where all large addresses, including exchange addresses, are dumping Bitcoin, that's not the case. The exchange addresses are still looking very healthy. They were at 2.01 million a week ago, and now they're up to 2.17. So we're talking about an accumulation for this very large tier of 160,000 Bitcoin. We can even go one step further and look at the 100,000 to 1 million. And you guys can tell this one tends to not move quite as much. But when it does, it's a big move, right? In early January, it was at 553.9 thousand. And now it is up to 663.7K. So these are less relevant to, in our opinion, where prices will likely head next. That's why we like to look at this pink line. You can see quite clearly when accumulation happens, prices tend to rise. When dumps happen, prices tend to fall, and it happens, after the fact too, which is why it gives such great alpha. So that's how things look on the supply end. I also brought up a graph to show what the actual amount of, here we go, the amount of addresses in each tier looks like. And this paints a bit of a concerning picture. To get this one out of the way, this is the pink line. This is the very largest addresses in existence for Bitcoin. There was 3 known 100,000 plus Bitcoin addresses out there going into 2022. And a couple days into the year, there was actually a 4th one. That's interesting. We obviously don't know much about what these addresses consist of or who owns them, but it's always nice to see that the absolute largest addresses out there, you know, there's room for one more of them in terms of the very, very top tier addresses. But looking at these key three here, beginning with the yellow line indicating 100 to 1,000 Bitcoin held in these addresses, look at the very clear drop off that's been happening. And this correlates with how much supply they're holding. They peaked back in late October at about 14,074 addresses and have dropped off to 13,560. That's a pretty sizable drop of give or take 500 addresses that are no longer existing in this size. And you might think to yourself, well, maybe they moved up to the next tier and went to 1,000 to 10,000 Bitcoin. That's actually not the case because this line has also been declining. It's very possible that a few of these became 1,000 to 10,000, but many other 1,000 to 10,000 coin addresses, if that's the case, excavated for smaller addresses themselves. And we can tell that because the 10,000 to 100,000 tier has also shrunk a little bit. Now, there aren't many of these. We had a peak of 87 of these 10K to 100K addresses, and now it's at 81. So give or take just 6 less addresses before. But these two in particular showing a continued drop is something to keep in mind because we want that overall number of addresses to grow. We don't care quite as much about the number of addresses as we do about the overall supply that's held by them, but seeing that both the supply being held as well as the amount of these addresses held by these whales going down, those both declining in tandem is going to be a concern until we start to see a nice uptick like this again, right? Where we saw in mid to late September, I'll remove this one, but these two lines really started to increase once again. This one kind of all at once, and the yellow one a little more gradually. So that's a really, this line especially, you can see very clearly how close it follows the price. And it does so with the amount of addresses generally fluctuating first, which is very much something to keep in mind because it's tremendous alpha if you're really watching these whales closely. Before I move on, I'm just curious, Balresh, are you seeing any follow-up questions to what I'm talking about with these whales? Because I really wanted to put an emphasis on it this week.
We had one question asking why these whales are actually dumping, but I think that's the goal question, right?
That's a great question, actually, and we, of course, any answer we give is going to be speculative. I'm sure Maxim would agree, but the trend that we're seeing in the stock market, for example, shows a similar trajectory, and we'll go over that in this call about the correlation between the two sectors. It does appear that there's still pandemic fears. That's why I wanted to show that chart at the beginning. It also appears as though interest rates and things like unemployment are a concern right now. And when there are so many people these days, especially retail investors who are in both the equities markets as well as the cryptocurrency markets, they're going to make decisions in tandem. And so real life scenarios like unemployment and Omicron and all these other things, they're going to impact what people do with their other assets, even outside of the stock markets. And it appears that there's right now a similar behavior going on between traders of the two sectors. So Maxim, if you have some added insight, we'd all love to get your opinion on this as well.
Yeah, looks like flight to cash, maybe stable coins. The only coin which is holding well at the moment, major one is Ethereum, and was the only one. And there are some signs which I do like, and they show very, very bullish call. If you later on can open our sun graphs, we'll show a few things related to how actually reluctant market became.
Yeah, we
but
could
what
definitely
you
do that.
but what you shared, Brian, it is indeed like it's a little bit confusing. Yeah, I'm fine with saying I don't see a clear call. Not that I'm really confused, but the signals are confusing. The one which will show now, it's one of the most bullish, which can be, but this holders dumping and it's a general environment where you can see like everything is flying to cash, kind of bond stocks, like everything. Difficult time. But the good thing is, and maybe let's go, Brian, can you open graph sentiment.net?
Of course. I may have to sign in. I have not used graphs in quite a while.
Make it down a second. Yeah.
Oh, perfect. No sign in needed.
Okay, and then you scroll a little bit down. Okay, stay here. Wait, up.
One more? Yep.
Yeah, here, total debt. So what it shows, it's how much is currently debt created in MakerDAO and DAI. And we like it because it's, in our experience, reflects the mood of participants very nicely. And, it's not Theta, it's not USDC, it's transparent on-chain and truly decentralized token. And you need to put your collateral, it will be liquidated, yeah? There's no jokes. And it's not as risky as some other projects which collapsed recently last week. Anyway, and here what we see typically the moment price declines and the debt start decreases is already a good sign by itself. But what we're witnessing now since 1 week, the price keep coming up, but people use it as a chance to decrease the exposure, leverage, and debtness in the market, which is the most clear sign they're very cautious. They're not confident. They're not sure about the growth of the market at all. And alone in this environment, I would normally issue 100% bull call if there would not be this whales also decreasing. Because this is only this chart is already very bullish. You can go down a little bit now. It's like 2 charts. Yeah, debt created, yeah. So just say this debt created. True. And you, and you see that recently, last week or so, nothing is done. Like Ethereum is growing, but no one is making any debt. Scared. Participants are scared. Yeah, this 300 million or whatever was liquidations left its races. And scare in the market, this is what you wanna when you wanna go down. So these 2 charts. The most bullish you see it, you don't see it normally. I just look in the middle of the screen back in November 21, how much debt have been created, yeah, and what happens thereafter. This is a bearish sign. People so confident, just minting tens of millions of dollars and putting Bitcoin and Ethereum as collateral, and then later it's liquidated. Now they don't do anything. So on the left side or middle part of the chart, this is the greed. What we see now, it's a fear. And it's much better than just what sometimes people reference greed fear indicator, which is a kind of garbage. But this one is real on-chain data. And it shows you there is a fear, and it's quite a strong one. So
yeah,
for me personally, again, not an investment once it's a buy zone. Yeah. But if we go one time lower, okay, good. Maybe that will make it, and then the whales will start accumulating again. Yeah, will be ideal. Ideal scenario. So ideal scenario, we make one more low. Ideal scenario. Yeah, and I'm looking for it. But this is what I want to say.
Yeah, I think this is extremely good alpha, Maxim. I'm glad you pointed it out. Obviously, you can see when the stacked lines and bars here are really starting to cluster together, and that indicates a healthy market with a lot of utility and interest in creating more MakerDAO debt. I think it's even more clear here, the amount of total debt just stacked together in terms of a cumulative metric. You can see when it's starting to really top off, that's when this all-time high was made. One more attempt at getting to the all-time high, but not quite. And then the big drop off here. And as the drop off was happening, less and less debt has been created. It's still not, it doesn't look like it's as low as it was, 6 months ago, which is a good thing. It's not completely silent right now, but it does appear that there's been a pretty severe drop off since November that we'd like to see turn around, and that would be a nice signal for prices to follow. If you're interpreting that the same way I am, Max.
No. It's everything is in context. For the moment, the longer we see this divergence price increase, but no new debt created, the better it is. So if it's not following up, it means they're reluctant. They feel scared. It's a wall of worry. One of the best, maybe second best, or depends if you are more like in buying lows or selling highs. There are two specific patterns. And this is wall of worry is one of the two best if you want to buy the lows. When it's obvious that the majority of the market, they're not buying in. And as you showed in Bitcoin, even big holders, they're scared. Well, the thing is with big holders, they're scared who are going to push it up. That's why, unfortunately, it's 50-50 now. If we would see increase in whales, that would be like really one of the best setups.
Right.
Not yet.
So to clarify, would we ideally want to see this total debt continue to go down while whale accumulation go up, and that's the ideal setup?
Correct. This is like really dream setup.
Perfect.
The second dream, we make one more low, then it will another cascade of liquidations, and the search you've been sharing by the dip, social search, goes on very low volume. So it's like people scared even to talk about. This is the second level of dream setup. Second, in the terms, we will not feel good. If we make it, each of us, me and you included, we will feel also quite scared. But still, we will cover it and we will go over our emotions. We'll say, yes, it's a good setup. But for this, we need to make a new low. It's not yet. We're not making the lows.
Yeah, and it's a good point about the buy the dip mentions too. I like to look at how the mentions of sell, selling, or sold are looking compared to buying, or bought, and see how these two are contrasting against one another. Obviously, there's always going to be a few more mentions of buying. People are much less enthusiastic to share when they're selling crypto to an audience that is mostly pro crypto. So you'll always see these red bars a little bit higher, but you can see there have been some pretty big spikes. I know it's a little tough to see. I can make it just a tiny bit bigger here, but there were a few isolated spikes of sell about two days ago, as well as just now. This is within the last 3-4 hours, we're starting to see a big spike again. You can also see the clear bunch of sell spikes that happened right here after the big price retrace. That also, of course, came with more buy calls, because it always gets polarizing when prices drop. But because the sell calls were proportionally a little bit higher compared to its average, that indicated that people were becoming very fearful. And certainly about a day or two later, we hit our local bottom before beginning to show some nice healthy bounce. So that's just another indication on the social side of things. And Max, maybe you and I can look at how, if I can get back to my Bitcoin template, how the weighted sentiment is looking, because I find it quite interesting what's going on there right now. Yep. All right, so I'll scroll down. Why don't we look at social volume first while we're here? This is social volume and dominance, guys. So this is indicating the total amount of Bitcoin or BTC mentions over the past 6 months. You can see that it's kind of been a mild decline, but really nothing to write home about in either direction. These are completely natural fluctuations. If anything, it's actually encouraging to see that the price has fallen this much while social volume mentions are still proportionally higher than they were back in August, September, indicating that people are still paying a lot of attention to the markets and haven't just dropped off. Ideally, we actually would like to see them drop off and for there to be a little less interest in Bitcoin and crypto overall right now. That was what we saw, back in 2019 when we went on like a year plus long bear market that caused a lot of the 2017, hype people in crypto to fall off and no longer be interested before getting another bull cycle that got them back interested. So social volume is looking pretty run of the mill. As far as social dominance go, I'll draw a little moving average here. I'll actually just go to 1 day, simplify it, and also add a 30-day moving average. So we can see that things really bottomed out in late November. This was just a week or two after the all-time high was made, and almost all of the discussion at this point, relatively speaking, was going to altcoins instead of to Bitcoin. And that usually leads to bad results, because if Bitcoin falls off because it's not getting enough attention, we have declines like this, which are of course related to, pandemic and FOMC speculation, plenty of other things. But either way, you want the proportion of discussions of Bitcoin to remain high like this to signal a bottom, or to signal that markets will continue to go up because so much discussion is related to the #1 market cap asset that keeps everything else propped up. And as we can see now, social dominance was down to a 6-month low of 11.2%, and it's now back to about 16.7%. So there is starting to be more interest related to the #1 asset, as opposed to, just altcoin parties right and left every single day. You want to avoid crypto or be more weary of a local top when all of the discussion is kind of related to whatever the latest pumping crypto asset is instead of Bitcoin. Do you see anything yourself here, Max, that you might think is worth discussing on the dominance end? We can also look at weighted sentiment too.
Growing dominance is good sign.
Yeah,
it has to be in this way. I mean, and actually decreasing dominance is always like super bearish sign. It means not super, okay. There are other which are more bearish, but it's decreasing dominance is a bearish sign. It means people are more interested in altcoins and taking more risk, and
right.
This kind of flipping towards the risk never survives longer than, I think the longest was like 3 months in my memory. You always need to come back. So, but increasing, yeah, it means everyone is coming back, and Bitcoin, Ethereum as probably stable coins. And the moment no one's interested in taking risk, this is the way it makes the most sense, It's always a market rewards for activity you don't want to do. And this is, but social dom is good. Actually, I didn't use it for some time. Thanks for sharing.
Yeah, Bitcoin is an interesting case for social dominance, because in general, we want to see that social dominance is staying high and rising, if anything. But for Ethereum or smaller altcoins out there, we actually have seen interesting phenomenons where it all depends on like when it's going through its own surge and how people are reacting. If there's, if this was an altcoin and we see a huge spike in only quant, for example, and then social dominance goes really high with it, that's actually a sign of a local top. And that's not such a great thing, because people are only paying attention to it because of the surge in prices. It's not just an organic, like, wow, quant is great with the technology and we love what it's doing for the blockchain innovations. That's not what's happening when you see an altcoin spike. But when you see organic growth in Bitcoin social dominance, that generally is just an overall interest in in cryptocurrency in general, and it's why Maxim and I see this as more of a bullish indication only for Bitcoin, only for Bitcoin's purposes and not for altcoins and even Ethereum. But looking at the 5-year chart here, I mean, you can see just how much things have changed. Back in March 2017, the average day actually had more than half of all discussions related to assets be with Bitcoin. And obviously, there are many more altcoin projects than they were 5 years ago. So that logically makes sense that that percentage has come down. But it's also indicative of people being more interested in trading those highly volatile, roller coastery assets that have, 15, 25, 35% pumps in a given day. And people kind of have more of a gamble mentality with it, which is bad. You can see even back here in late 2017 how the dominance related to Bitcoin quickly dropped. This was when many, Dogecoin was going through a run, its first big run back here in 2017. Many people were talking about the flippening, of course, with Ethereum eventually surpassing Bitcoin's market cap. That obviously hasn't happened and doesn't appear to be close to happening 5 years later. But many altcoins were really, really booming here. And that is inevitably part of what contributed to the eventual collapse. And then once the price did collapse, you finally saw social dominance begin to slowly rise until another, bull run started. And that's kind of the cycle. We want to see social dominance rise. And right now it's still kind of moving in the wrong direction. But at least over the last couple of weeks here, as I zoom in, we can see that it's starting to rise again, which is a good thing. All right, so that's social dominance.
Just a quick note, the poll is up for voting.
Thank you. So maybe in 5-10 minutes, we'll check out what some of the top votes are, and I'll try to spend a little extended time on them because obviously alts are a hot topic right now. I promised to show something before then. I wanted to hit on weighted sentiment, but if someone can remind me what I said I would show, that'd be fantastic. So looking at weighted sentiment in the meantime, we're looking at the 1 day. I'm going to switch this just to 7 days to give you a little more of a macro perspective on what's going on. Back in early October, all the way until early December, it was nothing but euphoria. Outside of maybe right here in early November, each of these weeks were showing a significantly higher ratio of positive commentary versus negative commentary, and also had more volume in terms of just total mentions of Bitcoin than average that we've seen through the course of Bitcoin's existence. When things are this positive and high, we tend to have big, severe local tops to send sentiment a little more back to neutral territory. This one actually occurred right before the all-time high, which is interesting. But in most cases, you'll see the big euphoric spike and then a big drop off the week following until we get negative again. And as soon as we got negative here in mid-December, that's when we finally had a little bit of solace with a hopeful rise. Things got back above 50K, but then it plummeted further. And this was, of course, related to many outside events that we've already uncovered, mainly, in my opinion, the whales dumping. And then, after this final drop off that occurred about 2 weeks ago, people actually became positive again and said this was the dip to buy. And so far, outside of this one final very short-term drop on the 24th, they've actually been right, because if they stuck with it after becoming positive here, they'd be up, give or take, 10 to 15% in Bitcoin returns, much more if you bought into altcoins. But obviously, it hasn't stuck. Things are continuing to waver between the 36 to 39K mark for the last week or two here. And people still seem to be very polarized. When it's right here at the neutral line, it can go either way. And people are kind of waiting to see whether to jump on the strongly bullish or strongly bearish side right now. And we're going to have to wait and see how this goes. But it's at least good to see that people aren't suddenly euphoric and saying like this 2-week slow rise is not the sign of another bull run, because we don't want the crowd to believe that and get greedy. That would signal to the whales that they can sell at a nice price and expect the price to go much lower. So ideally, we want to see a little more of this with a lot of FUD and doubt in Bitcoin's future, and that would indicate to us that it's getting close to capitulation time. Did anyone in chat remind of what the other topic is I wanted to hit on? It's okay if nobody remembers. I think there was a topic that came to mind, and maybe it'll, through browsing a few more assets or metrics here, it'll jog my memory. We can also look at supply and exchanges, guys. Really not much to say other than the fact that Bitcoin continues to excavate exchanges quickly. We can see just in the last year, the percentage of supply was around 13.9%. Now it's way down at 11.5%. So that's another 2.4% that has dropped off of exchanges in the past year. Just in the last 3 months alone, going back to November 4th-ish or so, it was sitting at around 12.4%, and it's dropped almost 1% more just in the past 3 months. That's generally a good sign, guys. We have seen enough evidence to point to the fact that when there is less total assets on exchanges, it implies that there is less sell-off risk that can occur. Obviously, prices had this huge greater than 50% retrace as the coins were moving off exchanges. But if you zoom out and look long-term enough, it clearly paints a picture that says exchange supply going down, especially starting in March 2020, has led to good results in price. There is obviously, a very long-term 6+ year pattern of it moving up, even though Bitcoin went up, but it certainly didn't go up at this rate until the supply and exchanges started to go down. Exchange flow balance, not a lot going on. We go to just the past year. We did see a pretty nice outflow spike that occurred on January 31st. This is on a 12-hour interval. I'll make it 1 day for simplicity. And these are the same. It looks like 2 different days the outflow spikes kind of happened. One on the 29th, one on the 30th. The 30th in particular, this was a difference of 19.4 thousand Bitcoin moving off exchanges versus on. That definitely contributed to that exchange supply percentage continuing to drop. The biggest one we've seen in the past year occurred way back in April. This was about a week after the then all-time high, where we saw 57.8K moving off exchanges versus on. So we look for these big outflows as a good sign that prices can recover, and then simultaneously the big inflows tend to lead to drop-offs. Another big outflow spike, of course, happened here in late July where prices really surged. So these can be kind of nice supplementary metrics. I wouldn't call it like a top 5 leading indicator by any means, but it's something that you can do a lot of research on, especially if you're on like a certain exchange and you want to see what's going on. On a major exchange like Bitfinex, for example, you can look at just what's going on Bitfinex, and it looks like Bitfinex was a bad example because it doesn't have a lot of data on it. But my point rests. This can be tremendously useful for you doing research on what's happening on your exchange in particular, especially when it comes to altcoins, looking at Ethereum or, Chainlink, any ERC20 out there. It has a lot of good data on what's happening on exchanges and whether coins are moving on or off on a given day or week or month. All right, Baresh, why don't you give me 1 or 2 top assets out there, and I'll dig into what's going on with them.
The first one would be Chiliz, CHZ.
Believe it's a ERC20, if I'm not mistaken. Yes, it is. Okay, what's going on with Chili's, guys? Let's take a look at circulation first. We're looking at the past year. And the past year indicates that circulation has mostly dried up. And this isn't necessarily the worst thing in the world. Ideally, we would prefer to see a rise in utility for Chili's, but considering the big drop off of most altcoins, this is certainly not
Always
atypical.
context. Always context,
Exactly.
Brian. I can see from this chart the two on the chart visible rises. They came from quite low circulation.
Mm-hmm.
Especially second one in September, or like end of September, wow, that was super low circulation. Later, yeah. So, and we can also see it in a way that low circulation is a sign of fear, like anti-seisms. I personally do like and prefer see growing divergence, like increasing network activities. Mm-hmm. But both setups are valid. If it's very low on a low price, it can also be okay. After a prolonged period of depression, this is also expected behavior.
Yeah. And it's good that you mentioned context, Max, because sometimes it's not about, circulation declining or increasing. It's how one particular altcoin looks versus the rest of them. And obviously, altcoins have all kind of seen this pattern of declining circulation as of late. And like Max said, when there was a big decline in circulation, this actually led for a very easy rise right afterwards, likely due to some whale activity, which we can look at next. But generally speaking, circulation can be a bit deceiving when it comes to smaller alts out there, because big circulation spikes can often be the sign of a local top, like it was way back about a year ago in mid-February 2021, when the largest spike of 1.93 billion actually led to a decline. If I highlight this, it looked like price dropped about 31%-ish during that time. So that's certainly something to keep in mind. And oftentimes these are very reactionary circulation spikes rather than something that cause price upswings or downswings. So looking at whales, let's see. So Chili's, the price is currently sitting at 19 cents. So we'll call whales approximately 100,000 to 10 million. That looks to be a pretty good sample size with some nice alpha to it, just based on a ballpark estimate. So I'm going to merge these together, hit confirm. And overall, this is a pretty interesting picture. We do definitely see, way back in March of 2021, there was this huge upswing in how much these Chili's whales were holding. They went from 6.26% all the way up to almost 9% in just a matter of a couple of days. And look at how price reacted. This was after the accumulation was happening, not beforehand. So clearly these whales do have an impact on price. And then after it hit this local top, we did see one more. This may or may not have been the all-time high. I have a feeling it was. There was a continued amount of dumping going on, though, that really sent prices down. Of course, crypto markets in general all had this big drop-off in mid-May, but overall, whales were dumping as the price was dumping, and then they started accumulating, as the price was flattening out a couple weeks later. They really went on a run where they went from owning 5.6% all the way up to owning 10.36. We're talking about almost double what was in their bags from May to early, or looks like late October here. And prices subsequently rose right as this accumulation was happening. So this would have been some nice alpha here if you started to see this accumulation going on right before the big rise happened. And then after the rise happened, they did take a little bit of a nosedive again with their holdings. After prices dumped, they have started to accumulate again. And even with this latest dump, even though it's gone lower, we don't see any sort of selling action going on, and these whales are still holding a combined just above 10% of the Chili's supply right now. So in my opinion, and Max, you can give yours as well based on this, it does appear as though whales are staying confident with Chili's right now.
Yeah, it's definitely was this. You can even draw the support line, yeah.
Mm-hmm. What would you call the support line?
I mean, if you connect, yeah, exactly like this one. Yeah, it looks like, and surprisingly, sometimes you can draw it in many metrics. If we change the behavior and instead of the support, it goes down, and then there will be like resistance connected top points. Well, yeah, that's not a good sign. But for now, they don't seem to be much concerned.
Yeah,
it's generally good sign. Yeah. No,
definitely seems to be a good sign. Just curious to see if there are even larger whales that might have any sort of alpha. So the 10 million to infinity, these are, yeah, undoubtedly, they own the vast majority of the supply at about 82%. So this is where the exchange addresses lie. Yes, there are probably some very large active traders within this mix, but we can see, compared to a lot of alphas, this is actually a pretty good group of whales that have proven to have some good leading indication based on these spikes correlating with prices. So, you know, if you're a Chili's fan and you're looking for some swing trading possibilities or long-term trading possibilities, look at the 100,000 to 10 million group of whales, and they're clearly painting a picture as to where prices can go next. And hopefully, if markets begin to improve, and you know Bitcoin starts heading up to 40K and beyond, altcoin whales, assets who have altcoin whales who have been accumulating like this will likely benefit most greatly during a mini bull market or major bull market that happens. So yeah, whales are looking good. Weighted sentiment, not much to say. It doesn't appear as though this is an asset that's talked about often. And so it's common to see kind of long stretches where it's just a little bit negative, but doesn't move a lot. So I wouldn't put too much credence into this other than to say that Chili's doesn't appear to be getting a lot of attention right now, which is objectively a slightly good thing on average if this is all in a vacuum. So that is good to see. Not a lot of dormant token movement. Mean dollar invested age continues to move up right now, not down. Funding rate. This is something this might have been the thing I wanted to go.
I would not use it here.
Okay. Yeah, it does appear like it's just slightly negative, but that's pretty typical with most of the markets right now. People are shorting just slightly at the moment.
What is the network growth?
Good question. Yeah. So network growth. It looks like it's on a pretty big decline. Not a lot happening.
Okay, well, that's maybe the only concerning sign.
Yeah, 30-day trend. It looks like it's pretty much as low as it's been in the last year right now.
Okay. Yeah. But taking into account like two stories, you in this particular case, it applies to some other tokens too. Whales, some of them are market makers or long-term holders engaged into the project. And the market at the moment looks like Bitcoin, Ethereum growing as a response to very clear inflation risks. Finally, market looks like a Bitcoin, Ethereum pricing in inflation is real and grows everywhere. So Bitcoin is growing. Whales are sure here in this token. They will find a way how to pump it when they deem it to be necessary. So you are betting here not so much for the coin, but for the market recovering, and then it will catch up quite nicely. At the moment, it's still lagging. Obviously lagging compared to majors, Bitcoin, Ethereum, and maybe a few other altcoins. But the whales are in, and they will find a way how to pump it. Not worry much. So you see, you always need to kind of get context, and behavior of the whales is very important. We don't have it yet. I guess it will take us some more time, but we are working on identifying more key players like market makers and those who are engaged into keeping the price, let's put it this way. On on-chain data, we soon might still take 1 to 2 months. The moment we see them, if they're increasing their holding or decreasing activities, it will be even more precise recipe. But even from what you've shown now, Brian, I would say if the market is survive, Chile will catch up quite strongly.
Yeah, it looks like one of the better bullish divergence opportunities out there right now. Now, of course, everything is going to be based on exactly what Max said, Bitcoin being able to turn around and fears of inflation kind of dissipating. So Chile's was a great recommendation to whoever made it. What else do we have, Max?
And by now in first place is Phantom, FTM.
Okay, all right. One of the really thriving coins right before the big correction that started in, I guess there were 2 phases. It really had a big increase in price from late September to late October, and then it had a second wave, and this was kind of isolated between December 20th and mid-January. So it was one of the few assets out there that actually was able to see a nice rise during this stretch when most other assets were flat or declining, and Phantom actually jumped about 127%. So that was pretty rare and unique to what was going on. So it was clearly, it's been a decoupled asset for a while, and it kind of goes to the beat of its own drum. And overall, it's been a better performing asset than most through 2021. It was sitting at about 13 cents a year ago, and it got to a high of a little over 319, now sits at 204, and network growth actually looks pretty good still. It has come down from what it looked like 2 weeks ago, but it certainly seems to have a base of around 400 to 500 new addresses created per day. It looks like high 400s. Compare that to where it was in the summer when it was in the 60 to 100 range mostly. It's clear that this asset has a lot of interest. Many new addresses are still being created despite the extended price declines that are going on right now. And that's a pretty good sign. I would say this appears to be another asset that is showing some hopeful glimpses for when markets begin to turn around in cryptocurrency overall. That being said, we can look at other things. Before I look at Whales, we can look at MVRV, which indicates that it is in that zone that typically indicates we are close to capitulation and max pain, usually around the negative 15% mark. That's where MVRV tends to get close to bottoms and prices tend to rise to push at least the MVRV back into normal negative range. So the fact that it's right below that, that's a pretty good sign for Phantom. As far as funding rate continues to look just about flat, maybe very slightly negative, which is a good thing overall. Daily active addresses, pretty much just like network growth. It's fluctuated a lot. It's down again right now. Keep in mind that most of these big, it looks like every one of the last 6 or so spikes in daily active addresses occurred with a correction. This is common with altcoins, especially somewhat new ones like Phantom. You see a big spike like this, it's usually because there's some big sell-offs going on with the whales, which we'll check out in a moment. But you want to avoid daily active address spikes that are happening in tandem with a big price spike. And right now, of course, there's no big price spike. So gradual growth in daily active addresses like this would actually be a good sign. But right now it's kind of staying down, and it's continuing a cycle that's kind of been going on for about 3 months or so now, 4 months, I should say. And now let's take a look at Whales and see what's going on there. So Phantom's price.
The biggest whale there, according to his own saying, is Andrei Cronje. It's Andrei Cronje. I don't know if you, well, you should have heard it, but
yeah, I've heard the name.
The father of DeFi, you can say it. Well, not the only one. There have been few people, but one of the most iconic figure. And he's moving the good projects or the ideas. It's a highly volatile just because of where Andrei is typically running things, test and production. So some things fail dramatically. And he chooses people to cooperate with, not always thinking much. Just he likes to build fast. So sometimes, like the latest debacle with Frog Nation, even though they had a lot of cool ideas and community strong, but it's a really big mess around it. So, and they wanted to build a lot of projects on Phantom or move it there. And it gives knowing this background a great opportunity. If it gets to any negative territory, be it sentiment or price riser or the elective addresses fall down, I would say, of course, non-investment wise, as a good buying opportunity. The risk with Andrei Cronje is always on the upside. You never know what he will deliver next month. So the risk is there is not to have exposure to what he's doing. Yeah, and exposure with Andrei is iFi, Keeper, and Phantom. Well, there are some projects, but they're too early to mention. So one need to have exposure to these projects, in my opinion. They always surprise. Keeper, like I remember, I wanted to build small position and I exited early, and then it's pumped in the middle of nowhere like 3 or 5 times. Wow, it's really like this kind of things happening. And Phantom, it's now one of these. Good to have something. Or especially if you don't have, like me, I don't have yet, and I'm looking at it. And searching in Radar social media. There are no negative yet, so I keep in my arm from pressing the button. And as you say, network seems to be active and strong. So maybe I should, but maybe I will regret later. But I'm waiting for some negativity or something bad. I like to in the bad environment. Didn't see much yet. And connected to it, actually, one of the other requests is Luna. Luna is the same. It's suffering only because of connected events with Wonderland and everything which is impacted. Or still there is some risk in. So the price is reflecting increased risk of UST. And other than that, it's high risk, but if it works well, it's also high reward. So Luna, in my opinion, is also quite a good bet. Similar, like if stablecoin depeg, high risk, it can crash. But on the other side, it's relatively easy to bring it back. Similar with Luna. It was one of the list. I'm just sharing my thoughts, how I see the things. And I'm looking forward. Still quite big part in stable cash and crypto cash. Way to enter. And Phantom is one of consideration for me too.
Yeah, you mentioned Luna. I wanted to look at actually the development activity of both Phantom and Luna, considering, Andrei's connection to a lot of these DeFi assets.
Luna is actually in 3rd place, just mentioning it.
Good to know. Yeah, maybe we can touch on that as well. So if I put both Phantom and Luna's development activity on this chart here, it looks like, let me get rid of this trend line that was for MVRV. It looks like Luna's development activity is outpacing. These are on the same axis. So it's looking a little better than Phantom's right now. Phantom's has dropped off a little bit, surprisingly. Just changing it to 1 day also. So Phantom here in purple, it looks like the maximum, and this was likely related to Andrei's own work, was happening in late September, and you can see that the price surged right after that. development activity usually isn't like a swing trading indicator by any means, but generally, if you look back, long term enough, you can see that like an overall growth in development activity generally leads to good results for a project. If I go back, I know this is before some of them even existed or had price movement, but we can see over time, with a development activity for Phantom, it's clearly gone up. This is a nice upswing that looks a little like this. And then Luna's looks a little like, we can ignore that outlier, but it looks a little something like that right now. If I put them on the shared axis, I think things would change dramatically. But yeah, overall, it looks like both are in a growth phase still. And this is what you want to see from projects. Development activity moving up over time, as opposed to, we have seen many projects that kind of look like this, or even worse, look like this, where they started developing a lot in 2019, but the team has shrunk, or there's just not as much innovation or interest in improving the project. And that generally leads to prices kind of drying up over time, because there's just nothing new or exciting to announce about the project to keep investors and traders interested in the project. But both Phantom and Luna appear to have some fundamental backing right now, thanks to a lot of improvements that are going on their coding side. So development activity looks good. As promised, I'll show the whale picture for Phantom really quick. Interesting. Okay, so this is, way back in 2020, when there was still some fresh coins being circulated and Genesis was still taking effect, and smaller addresses were getting involved. But if we look at just the last year, particularly around like June, July, that's when I've started to notice that this group of 10,000 to 10 million Phantom addresses were really starting to connect with where prices were going. So I'll even just say last 6 months to make it simpler. Look at how accumulation really began in early August. They had 34.8%, got up to about 39.1%. Call it a 4.3% increase in supply, and how price basically followed the trend. They actually topped out a few days after the local top here. This was when Bitcoin had its all-time high and Ethereum had its all-time high, and then everything universally started retracing. So Phantom holders likely didn't anticipate the entire market would drop back down right after, and they reacted and started dumping as well. And then once it got low enough, pretty much it looks like the day or two after it hit its local bottom here, they started accumulating aggressively again. And this time around, the accumulation really had some nice alpha and clearly implied that price would follow, which it did. Now, this part is interesting. They started dumping a lot, even though a new all-time high was eventually made in late October. But it very quickly dropped off. And from here on out, the accumulation really seemed to occur as dumps in price occurred. So this is more natural in what whales typically do with an asset, is they'll accumulate when prices go way down. And then as prices start to rise, they'll dump again. And then if they believe that prices can really start to move up more, they'll accumulate a little bit more. And right now, it appears as though they're kind of stuck in neutral. They're not dumping significantly, but it is kind of, their last move appears to be one of dumping over the past 3-4 weeks or so. So we would ultimately like to see this supply held by these whales start to creep back up to around 38-39% again. And until that happens, prices can definitely fluctuate based on Andre's development and all sorts of other things going on. Just note that, these whales own a little over a third of the supply, and they've shown some pretty good alpha over the last 6 months. So if you're interested in seeing where Phantom will go next, this group of 10K to 10 million coin addresses will likely have a good part in contributing to where the prices ultimately go next and whether it can return to $3 and above. So now I'll quickly look at Luna and then we'll call it a day here on the stream. I appreciate everyone for sticking with us. Let's try that again. Got to use the proper menu. All right, so Luna is not an ERC20, so our stats on it are going to be a little more limited. Like we looked at, development activity is looking good for Luna right now. That's great to see. Social dominance. So Luna had a huge run in late December, despite most other altcoins being kind of like this. So there was a huge decoupling event. This did have a bit of a social dominance uptick, but maybe not quite as much as you would expect. It was getting a huge amount, almost 2% of discussions back in early October when there were much more small spikes compared to this one. And when this big spike occurred, it moved the needle a little bit. It got over 1% in terms of discussions compared to the other top 100 assets in crypto. But it didn't get nearly as much recognition as I would have expected, considering this was a surge of about to 90% just in the span of 10 days. So that was massive. And then the dominance very quickly dropped back down because obviously assets crypto-wide were all declining at this point. And then interestingly, we had this big social dominance spike here on the 27th, even though prices haven't done much. It could have been related to a fundamental event. If anyone in chat knows what this might have been, do let us know. It could have been just the fact that one particular group was...
I know. No, it's this big event when Wonderland and a few other projects, meme.
Makes sense.
Magic internet money, they were collapsing. And because of tight connection or liquidity pools on Curve connected to UST, so was a quite serious concerns. And the peg for stablecoin on Luna was kind of out of $1 for quite some time. People were concerned, and there were a lot of discussions about it. So actually, you can consider it as there was a fear.
It was a FUD spike, yeah.
Oh, yeah, not not much FUD, but some levels it was, yeah.
Mm-hmm.
I mean, there could be more. The current level of hate towards Solana is stronger.
Mm-hmm.
Yeah, but it's a different topic. So, but there was some level, yeah.
Yeah. Well, it looks like social dominance has kind of cooled off now. Price bottomed out here just below $45 back on the 30th, and prices have risen. It looks like about 15% since then. So it's on a mini upswing, like a lot of altcoins are right now. It would be ideal. It would be ideal if the dominance started to rise a little bit, indicating that people were becoming interested in Luna in particular amongst many of these top cap assets. But right now it's kind of just sitting in neutral. People are probably waiting for another big move, see if things rebound again, or if things go back and threaten this local bottom. But dominance is looking fairly mundane at the moment. Funding rate, it is interesting to see that Luna is one of the few projects where there's some leveraged longs going on. The funding rate is actually a bit positive. Binance, it's flat, but our other exchange that we have data on for Luna indicates that we're at the most positive funding rate to, full screen this, going all the way back to early December. So we're talking about a 2-month high in funding rate right now as of this hour. And that is certainly interesting. It means that people are expecting, just based on chart kind of natural cycles, that Luna would be one that can really start to make a charge back toward where it was in mid-January or even late December. But for now, I would call this a little more concerning because of the fact that it's positive while most other funding rates are negative. People might be getting a little bit greedy and looking for a little bit of gamble when it comes to Luna's price. We can look, by the way, I haven't shown this yet on the call, but funding rates here, This is most of the top 100, 150 market cap assets that we have funding rate exchange data on, excluding things like stable coins or kind of one-off projects that aren't particularly important. You can see that most of the projects here are in green, indicating a negative funding rate is going on right now. And then there are only a few that have positive funding rates at the moment. So keep that in mind. We mostly will want to watch, of course, what Bitcoin is doing. If Bitcoin's funding rate is negative, which if I'm looking, it is not right now. It's pretty much in neutral territory. If this starts going negative again, which it has been for a lot of the last week, that would be a nice sign that there's a little bit of FUD going on in terms of people putting their money where their mouth is. But for now, it's neutral, but altcoins continue to be negative. People really expect that altcoins are going to get hammered and are trying to ride the wave down. All right, so that was a quick digress from Luna. Let's go back for one or two more stats here on the Luna side. Weighted sentiment. Let me check to see if this is an accurate current day. I think it is. I think it is, because this is showing that it's the third, not the fourth. So the fourth is currently still compiling data, but the third is indicating that weighted sentiment has actually taken quite a dip. It's kind of interesting because it's the lowest it's been in the last year. So that might be a bit deceptive. I think it's because we're looking at a week. If we just look at the last day, it might clear things up. Yeah, so yeah, it's legitimate. There's definitely been a downswing in sentiment toward Luna right now, which is interesting because it comes with the funding rate being positive. But as far as actual social commentary on Terra/Luna right now, people are quite negative and not really giving it a lot of hope. So this contrasts what's going on with funding rate and could be indicative of the fact that there's a bit of FUD going on due to the fact that there was such a price slide that had happened over the last couple of months. So ideally, this is a good thing more so than a bad thing. We want to avoid euphoric spikes like these, which clearly indicate when prices are likely to decline, especially if you see a social dominance spike like this, or I'm sorry, a weighted sentiment spike occurring at a price surge. That's a nice indication that prices will likely come back to earth and you can safely take profit and buy back in again lower. We, of course, had this fundamental event that caused the weighted sentiment to be up once again. This was likely mostly just related to the volume of discussion as opposed to the ratio of positive versus negative comments. But overall, it appears as though there is not a lot of positivity going on with Luna, and that is a good thing more so than a bad thing. Anything else I might be able to find out here? Since it's a non-ERC20, that's pretty much all we can show for Luna at the moment. But overall, it looks to be, especially with development activity, it looks to be a project that can have some nice rebound potential. And we'll just want to take a close look on social dominance and weighted sentiment. I'm actually curious also on just regular trading volume, which we rarely look at on these calls. So if I add regular volume to this chart, pretty interesting. So there have been 3 big waves of major trading volume spikes going on. They all seemed, or most of these spikes seem to occur at local tops, which is interesting. Right now, trading volume appears to be dormant once again. And much of these dormant volume stretches actually appear to correlate with local bottoms. So this is more of a good thing than a bad thing based on what I'm seeing from other patterns. It doesn't always work out this way, and trading volume is not always the best leading indicator, but it certainly is something, especially for TA traders, something to keep a close eye on because the latest data that we have clearly indicates that you want to avoid trading volume spiking every time a price spike happens. But gradual growth like this, that's the healthy thing you want to look for. Trading volume going up more organically as the project is getting more and more recognition. So that's a good spot for us to conclude, guys. Hopefully we've had most of your questions answered. I'm sure there are other assets that we can touch on, and I always welcome you to mention them on our Discord server. Maxim, myself, and many of our other great staff are more than happy to help out and give some insight as to what we're seeing, especially if you're a Sandbase Pro member and you talk to us in our Pro chat there. That would be a fantastic place to post your questions. If you are not yet a Sandbase Pro member, don't forget that it is a very affordable $44 a month, especially if you refer others. You can very quickly have that monthly membership paid for. And we really do believe that these metrics do pay for the cost of being a member quite frequently, as long as you're paying close attention to many of the leading indicators that we showed off on this call. So with that, guys, stay safe. Make sure to proceed with caution. Remember that everything we've shown on these calls, this call and other calls, are not to be taken as investment advice. We're simply trying to convey what the metrics are showing and how history has tended to fluctuate based on similar patterns to what we're seeing now. And we wish you all the best. I want to thank Maxim and Balresh for helping out on this call. And I'll talk to you all very soon.
Talk to you guys. Good luck. Bye-bye.